Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 2nd of March. All right, we're a couple of minutes away from flicking over to where Tuesday starts, 5 p.m. New York. Let's have a look at the markets here now. Equity markets have recovered substantially. Massive, positive day. Now, has that flowed onto a risk-on, risk-off day? Well, not really, right? The Aussie did recover a bit, and the Kiwi, but you know what? Overall, the dollar is still moving to the top side. Now, this is a lot obviously related to, and you may have been reading a bit about the bonds, about the US bond market, right? So being pretty buoyant. But it had actually, funnily enough, yesterday, it got to 1.6%, the 10 years. It's now down at 1.42. Like, you would expect some sort of correction there on the dollar, but it hasn't really happened, right? So, and the Aussie dollar was its rise, okay, was a bit attributed to the RBA coming out and buying some bonds, right, to try and lower, the yields that are coming out of the bonds at the moment. Higher yields means basically higher interest rates, right? So what they're trying to do is they need to get the bond prices back up. Bond prices up, yield falls. And that, because what can happen is, and I didn't mention this yesterday, here's the Aussie here sort of being a lot more buoyant, right, than, say, for instance, the euro, which is still heading south. It's got problems. Strong dollar, weak euro, makes sense to me. Sterling has sort of found fair ground here at the moment. And here's the Aussie dollar just sort of holding ground. And if anything, coming back a little bit with the RBA buying bonds. Now, one thing you have to understand with bonds, right? So higher bond yields makes the currency more appealing, right? Higher interest rates sounds great. Underlying higher interest rates. Don't think the central banks are changing interest rates, but a higher bond yields can actually cause other problems in the housing market. Like actually the mortgage payments and everything else can change. So the central bank doesn't like to see yields go up. Now, why the US treasuries have been a little bit different is because the Fed came out and said they're not really worried about higher bond yields at this point, but there will be a point where they will. Right. So that's what we've got to keep an eye on. The RBA came in and bought bonds specifically to try and lower that yield, because they can see problems. The biggest problem in Australia is probably the housing market. And that's what they're trying to sort of protect at the moment. It's probably an endless task, but we'll have to see how that one plays out. So let's just come back to what we've got, right? So don't think the equity markets risk on is driving the whole currency. So a risk on day, the US dollar would fall, but it's not. So disconnect your brain from thinking risk on, risk off. Sentiment is in play. What we've got is a situation where we've got a strong dollar. Underlying treasuries at this point are dominating. So the movement in equities, right? Now, so this got up to, the 10-year got up to 1.6%. I think it was on Friday. It's now back at 1.4. So the correction here, there was a move down in equity markets. Now that drop back down in the 10-year yield gives I think opens the door for a bit of a bounce in the equity markets. I don't think it's over just yet, but understand that's where the connection is for the moves in the equities at this point. So this is tricky, right? This is where your understanding of the complete market really comes into play. Now, you can go through, read a bit more about what's going on. There's a few things here, obviously, about COVID. It gets plenty of airtime, the rollout of these vaccines. And there's plenty of other stuff going on, but understand this is what we're looking at. Don't forget sterling, right? Sterling's massive gain there, like as I was saying yesterday, like 500 points attributed to pretty much the rollout of the vaccines. Now, that is a short-term fix and very well could come undone. So keep an eye on that as we go forward. And outside of that, we're really sort of trying to piece together the best trading opportunities. So when you come back to that, you're looking at technicals. And right at this point, right, we've got some pairs that are breaking up, some pairs that are breaking down. We've had that massive correction here in dollar CAD. If anything, there's a short-term resistance level building there. We've got support here on the Kiwi. You're probably adjusting this trend line here on the Aussie to a little bit lower. But what we're trying to do is identify direction. The dollar is generally going up, right? Dollar CAD's the odd one out. And the dollar block is going down We need to wait for the levels to get in and when that momentum comes. It's very easy to say the dollar's going up. That's one thing. But as a trader, we want to quantify the entry levels. And at the moment, they're not just there. And that's why when you do see entry levels, you've got to trade, because if you don't, you miss the opportunity. And then you get to like a couple of days later, like now, and you're like, well, yeah, okay, the entry's lower. Dollar Swiss, you'll have a support line here somewhere. But euro up here, probably looking to sell sterling on rallies, Aussie on rallies, etc. So right now, it's a bit of a wait and see. So when you're waiting to see what's going to happen, you need to come back, start tuning in, because the economic numbers are starting to play a part in the move. So looking at what's coming out over the next 24 hours is important. Understanding what the main release for the week is super important. Non-farm payrolls on Friday. But we've got some key data coming out today. You know, building approvals, current account stuff out of Australia, not necessarily that important. What is the RBA. Let's see what they've got to say. If they're buying bonds, that should be a part of their statement and their comments, right? We want to see what the plan is, right? The central banks are methodical. We want to see what the plan is, and that'll tell us where the Aussie dollar is going next. And that may be something to do with the bonds. All right. Now, with the euro on its knees, I'm looking for euro or German data. Retail sales figures, I'll take whatever I can get. Weak numbers probably gives me a trade with current momentum. It's an easier trade to look at, or easier trade to sort of get yourself into. And the release will be the entry. And also on the back of that, you've got the employment numbers. You know, usually with the German numbers, just to give you the heads up, they are usually pretty consistent. So we'll have to just see how that's going. You got some flash inflation numbers there out of Europe as well. And well, there's some GDP numbers out of Canada, maybe worth a look, but there's bigger things to play for as you go through the week. And as I scroll down here, you'll see the major macro data that you need to sort of really be focusing on, because they could come into play as the markets start to really connect. It's good to see the treasuries coming into play, equity markets doing their own thing, and the currencies, well, they're currently waiting to, you know, engage with where direction's coming from. Usually, okay, normal markets, it's the fundamentals that drive these things. Geopolitical events, right? Well, that's where the risk on, risk off sentiment comes from. And when things get really loose, okay, loosey goose, that's where the US treasuries will start dominating as well. And the US treasuries, when they impact, they'll impact the equities, and that'll flow through to the other pairs. So keep an eye on the data, right? All these different components. There's plenty to keep an eye on. Your job is to work out which way the currencies are going, right? For me, right at this point, dollar's going up. So I like dollar up, means the other pair should be going down. If they're not, find out what is impacting those specific currencies or instruments. And then you can sort of piece together whether it's a good trade or not. And that's all I'm trying to do. So when, don't forget the RBA today. So when you come back and look at your charts and you're sort of trying to work out what's going on, you go, yeah, Euro's got clear direction. Sterling broke back down, consolidating at this level. Looks like it's recharging for another either leg down or a massive leg up. Aussie, we've got the RBA today, right? So that's front and center. Keep an eye on that. No change of rates expected, but we could get some weird comments. And the Kiwi, well, I expect it, with no data coming out, to follow the Aussie, right? And that's where you can sort of piece it together. All right, guys, so that's where we are. This is starting to get exciting again, because there's things happening outside of the geopolitical news that's been banging around for so long. So just keep an eye on where momentum's coming from. Start of the Asian session right now. It's usually illiquid and not hugely directional. I'd say wait for something solid and tangible like the RBA releases today to see where that thing could really be going. And then you can start to look for the European session to really work out if we're going to see the euro go up or down, or we're waiting for that North American session to see what the dollar's doing. Right? That's the cycle of what we're doing just at the moment. All right, guys, have a good one. All the best. Cheerio.